Hey, what's up DEXTools friends? In this episode, I'm going to show you guys an awesome trading strategy that you can use to make money and more importantly, not lose money in markets. So make sure you hit that subscribe button, and at the end of the video, I'm also going to show you some of the awesome allocations that DEX Force Ventures got into. So let's get right into the trading strategy. I'm super excited to share the strategy with you guys. Let's launch the app, and this is DEXT where all the magic happens. Last time, Phantom wasn't integrated. Now it's here. You have everything you need to slay the Phantom ecosystem. It really takes all the work in finding the coins because you have hot pairs here, and it'll show you the top trending coins on different networks, from Phantom to Polygon, Binance Smart Chain, and Ethereum. And you know the team's always working hard, so I can't mention which new network will be integrated into DEXTools. Let's get right into the trading strategy, and let's just pick the top coin on the Ethereum network. That's OHM Olympus coin. Also, I wanted to mention that you can always buy and sell your favorite coin on DEXTools without going anywhere else. You can do it right on the website. So you can click the buy and sell here, and then you'll have your aggregator. It'll give you the best conversion, and you can obviously just go to SushiSwap or Uniswap if you'd prefer to do so. And you can trade on any network. Let's get right into the strategy. So the trading strategy I'm going to be sharing with you guys is moving averages. They're the most used trading indicator, and they're awesome. So moving averages are used for multiple reasons. They help you identify the trend. They're used as support and resistance, and they can be used in congruence with together if you're using multiple moving averages. So I'm going to show you a few strategies and a few ways how to use moving averages to your advantage. So right here you have the chart, which is why I love DEXTools, as you're on these platforms, these protocols, and they don't have anything but the swap interface like this. So you need to be able to see more data, more tools to that you can access, like all of this trading information. And let's just maximize this full screen mode right here, and let's show you how to add moving averages. So you come up to the indicators right here, and then we're going to add our moving averages. So a moving average is basically you're adding every candle. So this is a candle right here. This is a candle. It's just the price for the day. You have your open, you have your low, you have your high, and you have your close. Those are the 4 data points. So a moving average adds, we're looking at the daily right now. So every candle represents a day. So if this is the 9-day moving average, it adds up the prices for the last 9 days, and then it averages out in a line. So let's add one moving average, and I'll show you guys how it can be used. So right now we have the 9 that was added by going here. We can go into settings to change it. The most used or most common are 50 and 200. Also the 20 is very popular as well. So this is on OHM. Let's actually turn this a little bit darker to make it more clear. So the 50, you can see, let's make this, yeah, perfect. So this is used as a trend identifying tool indicator, and it's a lagging trend identifier because you can see here that the price has dropped, but the line, the moving average, is following in a lagging format because the price has dropped before the actual moving average has caught up to it. So when a moving average is pointing downwards, you are in a downtrend. When it's upwards, the price is moving upwards. So you can see here, when it broke above it, this would have been a buy. This is one strategy. So you can see right here, it broke above it. But you can see right here that it got rejected. So you may have not bought it until it confirmed the break right here. And not only did it break above the moving average, it came back and tested it right here. So you could have actually added to your position, and that would have been the last touch. and that moved about 75% to the upside if you added here or if you just took the position here. Then you can see it came back down, it broke down, and it actually tested again. So moving averages are used as support and resistance, and when they break above, you can assume that the price action is going to go upwards. You can obviously get whipsawed where it can go back and forth above the moving average, where you're losing a little bit of money or you're making a little bit of money, or just the fees are, a hassle when it comes down to that. But the winners really add up. So let's take a look at if you just followed the moving average, and let's see the percentage gains on one moving average. Then we're going to add two moving averages, and we're going to look at a strategy using both of them. So let's clear this up. If we didn't have much data back here, so the more data you have, the longer the moving average will be, and the longer we can back test. But let's say we bought here, that moved from 45%. It retested, but it did go about 90% from the break. And if you held it all the way till the crossover, you made about 31%. So you didn't make much if you held it till the crossover here. If you got out here, you would have saved approximately 20% instead of just bag holding. And then if you bought, this was a huge move. If you bought on the break, it moved all the way up 300% pretty much. And if you sold it just on the break of the moving average to the downside, you would have been up 155%. And you can see that these moving averages are very well respected, because after it broke right here, you can see that it came down, it retested this moving average, and the candle actually broke down, and you can see it kind of retested here and it broke down as well. So if you're more advanced, you can actually use moving averages to short as well. So let's go and let's add another moving average. I'm going to show you guys a strategy to use moving averages with two of them, and then we'll switch the coin and we'll look at more examples. So we're going to add another moving average, and we're going to do 200. So the 50 and 200 are very popular, especially when they're used together. So let's go to the settings. Let's do this as a 200, and then let's do yellow so it stands out a lot more. So you can see, let's go to the 4 hours. So you can also change the time frames to smaller time frames to suit your style of trading. If you're a day trader, you can switch it on 5 minutes. You can switch it on 3 minutes. Like look at it, look if we put it on the 1 minute. You see, this was December 5th. This was earlier today. You got the crossover. You got the crossover right here. And that actually gave you a 17% move on the 1 minute time frame. And you can see here where it crossed over to the upside, it broke up almost 10%. So they can be used on any time frame, but let's look at the larger time frames. When you got the crossover here, you can see that price broke down this moving average, broke down this moving average. It retested both moving averages right here. That's so much confluence, and it didn't break above, it broke down. So you can see here, this was a major sell spot. Instead of holding, you can learn how to use moving averages or other technical analysis to aid you in your investing. So you would have saved approximately 65%. If you just sold on this crossover and bought back on the recross. So when two moving averages cross over, I'll explain exactly what that is. So when two moving averages cross over, that's called a golden cross and a death cross. When you have let me do that. Let me have those separately actually. When you have a golden cross, that is when the smaller time frame, so the 50, which is our yellow, or actually your yellow is 200. Our 50 is the 200, and that's the faster moving average because there's less days. So the moving average is a lot more, tighter. It's a lot more quicker, and it catches up to the price than 200 days because it has to add up 200 days. So this is the smaller moving average, and it's the quicker moving average. You can see how it's tighter to the price, where the yellow one is 200 days, so it's kind of lagging. So when the golden cross is when the smaller time frame crosses the larger time frame. So death cross is when the smaller time frame crosses the larger time frame to the downside. So when you have the faster moving average cross it to the upside, like right here when they're moving upwards, that's a golden cross. When you have the smaller time frame crossing the larger time frame to the downside like this, that's a death cross. So you want to get out of that. So you can see here, when this death crossed, you actually saved 65% approximately. And you can see here, when we moved upwards, so this was a clear change of trend right here. When the moving averages crossed each other to the upside, you can see right here, this was the lows right here were broken with a higher high and then actually retested both EMAs right here, and it gave you another perfect entry right here and another entry right here, which would have given you awesome returns. So you can see you can trade it intraday or whatever time it gives you an opportunity to buy, or you can just kind of buy and hold when it crosses. So you can see here also another 100% move. If you hold to the crossover to the downside, it won't give you the best percentages because the price runs upwards a lot of times, like you see here as well, where the crossover was here, but the price reached all the way up to 1300 and the crossover was $983. So you can see this crossover right here, and if this is the smaller time frame moving over the larger time frame, that gives us our golden cross. So this was our golden cross right here, and then it didn't really give you another buying opportunity till right about here. You can buy on the smaller you can buy on the smaller moving average right here. It gave you a ton of buying opportunities, or you can be more patient for that first 200-day moving average, which usually gives you a juicy buy. So if you bought on this moving average crossover, price reached all the way up to 282%, and till the crossover here, it gave you 169%. So pretty awesome gains. Let's take a look at some other coins right now, and let's see how this strategy works with, let's say, Ethereum. So this is Ethereum on DEXTools, and we're going to be using, let's do the 4-hour as well, and we're going to see, I mean, Ethereum's been pretty friggin' bullish. So you can see here, this is July right now, and you can see that we had the crossover. So that was, like I said, when the smaller time frame, so this is our blue 50 right here, when that, let's make this big, when that time frame crosses over, that's a golden cross. So that would have gave you an awesome return of about 93%. If you just held until the crossover to the downside, that would have been 58%. And then you can see here, it broke down, consolidated for a little bit. If you knew different types of technical analysis, maybe you could have bought the support right here. But you know what? We're sticking to our moving average strategy. It crossed over again here, and you know what? That was a huge buy. We would have bought somewhere around here on the crossover, and it moved another almost 50% before it started to cross over, and now it's whipsawing. It's going in and out, which you could be buying and selling, hoping to catch the next move. And some of these times, like when you buy and sell these whipsaws, it happens a lot of times where you're maybe making 1% or you're actually losing a little bit after fees. But these large moves make up well over these whipsaws where you're losing 1% or 2%, because remember, you're not going to win every trade. Not every trade's a winner. You may even lose 5 trades in a row. But if you lose 5 trades in a row and they're 1% or 2% each, that's a maximum of 10% loss, but you're hitting these 50% wins and these, 70, 80, 100% wins. So you can afford to take a few losses in a row. And then when you start winning some in a row, when you get better at this strategy, you'll start crushing it. So if you have any questions about this strategy or DEXTools, post them below, and we're going to go into DFE and some of the allocations that DEX Force Ventures has got in its members. Hey, so I wanted to share DFE with you guys, DEX Force Ventures. And if you don't know what it is the hottest venture group out there right now. You need to own 100,000 DEX tokens to be a part of this premium group. If you own 300,000 tokens, then you're part of Stealth. And I can't even share some of that information with you guys. So let's go over the premium DEX Force Venture allocations, some of the bomb ones that we've recently had. Decentralweb did awesome. Dreams Quest, that they hit it out of the park. It did up to a 300x, I believe. That was awesome with a daily yielding vesting schedule. So it's just awesome. Colony with their TGE coming up in a few days on the Avalanche network. This is going to be huge. Meta Brands, even bigger, I believe. So there's so many projects that we got into, and you're reading that right. Sidus Heroes. Everybody is dying to get into Sidus Heroes in DEXTools Ventures. DEX Force Ventures hooked it up and got all of the members an allocation into Sidus. That is going to do extremely well. Numbers Protocol, DEX Sport, Kingspeed, which have done all extremely well. There's a ton of more projects that are going to be onboarded. So all you need is 100,000 DEX tokens and you can join DEX Force Ventures. It'll be the best thing you ever do. So I hope you guys enjoyed this episode, got a ton of value. Post all your questions below and we'll see you in the next DEXTools Academy episode.